Hey, how's it going, PC team? In this video, we are going to go over my strategy to avoiding breakouts recently. It's something that I've implemented into my trading in the past 3 to 6 months, something I haven't really talked about. So how do I avoid fake outs? Again, this was a group lesson I did with the team earlier this morning, April 4th, 2023. So as of right now, how am I trying to avoid breakouts, and how did I avoid one today? Well, I'll add more coming right up. So a fake out is the opposite of a breakout. Now, we just talked about what a breakout was, and a fake out is simply a stock creates a high, okay? And what happens is sometimes the stock will actually break, but barely, and then it'll come flushing down. Or it'll tap, like it did today, and then come flushing down. So how do you avoid that? And this is what my number one biggest loss always is. I size up into a breakout, it taps a breakout level, and then gets flushed going down. So what have I done in years past to try to increase the percentage of my win rate, basically? So all I do is now a lot of it is volume based. I had to understand it is way more volume based than I could ever imagine. So if these are volume bars, okay? Now bear with me. And you're seeing the volume like this, right? And then I'll have my black marker. Stock's going up, breaks out, kind of pulls on back, consolidates. Okay. If you see this, you're going to see the volume start to decrease, and then it's just going to be kind of floating around this level as the stock consolidates. Far lower volume than when it was prior. Now, eventually, the stock's going to curl on up, okay, and try to break out. Questionable. Now, you see the volume spike a little bit and you get kind of excited, like, man, we're increasing volume a little bit. But compared to the average volume it's trading at, who's going to want to trade this move? You got to understand there's people with positions in this move already. Who's going to want to buy into this consolidation or try to buy into this breakout when there was, say, 5 million shares of volume right here and there's only 30K shares of volume right there? You have to understand that volume is the key to every single trade. If there's little volume, if there's lighter volume, it's going to screw up the trade immensely. You need shares, trading hands to be able to have a breakout. Reason being is if one or two traders decide, I'm gonna take profits here, or I'm gonna start a short here, then off that 30,000 shares of volume, if it's just a few traders, it can fake out. With 5 million shares of volume, you got to think of the herd immunity. There's thousands of traders trading this. So the average trader is going to think it's going to continue higher. Therefore, there's more buying pressure and selling pressure. When there's light volume and there's less of a pool of traders to pull from, it's a much more emotional, much more harder state of trading. Does that kind of make sense? Now, I just use volume weighted average indicators. So we're going to see something like this. I'm sorry, I drew that wrong. Maybe I didn't. Okay, this is my volume weighted. This is my volume moving average. Okay, what I do now, if the stock on the 5-minute time frame is below the moving average or the volume is, I do not trade that breakout. I have to step away. Or if I try to buy with anticipation of it and I start to see that the 5-minute candle is closing and it's close to it, I'll stop out at break even, kind of what I did today. Okay, so you have to understand it needs an increase in volume. Now, on the flip side, if the volume, say, was like this, decreased a little bit, but was starting to increase while the price wasn't really increasing, and you start to see the VWAP kind of curl up like this, that's a solid breakout opportunity because volume is increasing while the price is increasing. The problem is off of these fake outs, what you'll see is volume or the volume weighted average price or VWAP will look something like this. Now let me erase my board. Stock will have something like this. The VWAP is an easy scale to see if this is going to be a fake out or not. Moves up, pulls on back, consolidates, starting to curl up for a move higher. Maybe has a little bit of a pop right here and there, so you're looking at maybe trading something like this, a little bit of a flag. Okay, you know how to trade bull flag, so you want to trade a flag. Now, what's going to happen is VWAP's going to curl up like this, right? Because this is an increase in volume, or I hope. If it's not, then you should be trading it. Okay, now it'll level out a little bit, maybe even go down, and then barely start curling up. That's not what you want to see. If the VWAP is more like this, and it bounces higher, and then as it starts to consolidate, it starts to flatline a little bit, but still kind of an exponential curve and increasing like that, then you know that it's bound for a solid breakout because volume is also increasing with the price. Volume always needs to increase when price increases. If it doesn't, then generally speaking, the price is going to decrease or fake out. Okay. Now, before I move on, does anyone have any questions as to, I don't know, why that is? Any questions as to what I just talked about before I move on and show you real life examples? Any questions? Miles here. Okay, so now we're looking at BFRG this morning, and this is exactly what I was talking about. Okay, so a lot of guys on the 1 minute time frame see this action, they're ready to trade it. But what do you see happening with the volume? What do you see happening with the 1 minute time frame? Okay, you go over 1 minute or 5 minute. It just starts to flatline. I mean, honestly, it started to flatline during this move to the upside. It was starting to decrease in volume. Now check it. If you look at the volume, okay, here's what the average volume is trading. Every 1 minute was 100,000 shares of volume right on average in here. That's crazy. 100,000 shares every minute. Easier to see on the 5 minute time frame. However, when it came time for a breakout, what was it doing leading up to that point? Check it. The average at this point, it's gonna be hard to see. The average at this point was about 400,000 shares of volume per every 5 minutes. Okay, and now it's trading at 100,000 shares less every single time. Now the thing is, this was much less volume when it actually broke. When the volume came in, it was starting to trend downward. So yes, it broke out in volume, but the previous candles before that were below it. Okay, and this one was below it when it initially broke. It didn't get above it until, like I said, it started to go down. So one thing you have to understand is when you see that move, you need to not trade that breakout. High odds of a fake out just because there's a decent amount of decrease in volume, especially leading up to that point. Okay, so that is how I like to avoid fake outs. That's the easiest way I could think of on being able to gauge the fake out. There's other ways. For example, if you guys watched my video on the extended Elliott wave theory, um, you know that it's kind of uncommon to have like a picture perfect setup where literally the stock goes like this, little pullback, rallies, little pullback, rallies. And that was what was starting to form right up in here when all we could see was this move. I'm like, wow, that's too clean. I mean, quick 5 minute pullback push, quick 5 minute pullback push. The stock needs time to breathe, needs time to consolidate, and that's why I told the team this morning I wasn't going to trade it. It needed to consolidate, and this wave was going to be extended. So what we know in this wave is there's 5 waves, key waves of its own. So one, two, well, sorry, it would be 1, 2, 3, 4, 5. This is the breakout. So we know that um, in this extended wave, this couldn't possibly have been the breakout just because it didn't have enough waves in that extended wave. It's I don't want to jumble two lessons together and start to confuse you guys. If you go back and watch the last YouTube video I did on it, it'll make a little bit more sense. But the easiest way for me to help avoid fake out simply is my volume um, indicator. Now, if I go to my volume, um, and it's just the 9 EMA on my volume. That's all it is. If anyone's wondering. So That's how I avoid fake outs. I have to look at the volume. INDO is another example of this. I'll show one more example and then I'll open up the questions. INDO up in here, the 650 break, it tapped like this, tapped it, and then when it came time for a breakout, I mean, this had limited volume anyway. In it, I mean, it barely broke and then got rejected. I actually shorted it off of this pop because of the volume. Um, this one was a little bit harder to understand, but if it's pushing up off of light volume, for example, in this case, it had like 250,000 shares of volume and it was a leading gapper. That's not enough volume to make a stock have a solid breakout. So if it's trading off a light volume period, and like, yeah, I guess the candles are above the 9 EMA, you still wouldn't want to trade it just because it has light volume. Now, what constitutes light volume? It varies on the stock, but you'll be able to see within the candles. I mean, just from looking at it right here, you can easily see how choppy it is, the spaces between it, the jumbleness between the 9 EMA. You could tell that this is off of light volume without even having to look at your volume parameters. Now, if this has less than 250,000 shares of volume and it's leading gapper, then yeah, this is light volume. And that's all I did was I shorted it off of that pop, knowing that it was going to reverse quite nicely, and it did. Did the same thing here. So, does anyone have any questions? Did that help at all as to how I avoid fake outs? It's extremely volume based. If there was a equation to calculate what would be low volume, I would give it to you. But I don't have that yet. Only thing I could think of is just utilizing the 9 EMA on my volume bars. And if it's below that, then don't trade it. Don't trade it. Especially the candlestick before it as well. It needs to gradually increase in volume. If you see it just spike in volume like that after I had a bunch of low volume candles, the odds of it faking out are much higher. So I personally like to see at least two candles above the 9 EMA before I'm trading it for a breakout. So I can see the stair step in volume. Because any one trader can have one decent sized order and can make it that one candle have decent volume. But if it has multiple candles in a row, no one's consistently buying minute after minute after minute. Okay. Did that answer any questions? Clear up any confusion? Yay or nay? I'll go over it all again if I have to. So, to recap, what we talked about, things I like to see: one candle, one volume candle above before break. So I like to see at least 1 minute or one volume candle above 9 EMA before I see the break. Second one is understanding extended waves. Okay, so if the stock does a perfect little 1 minute pullback, it's very rare that's going to move higher, have another perfect little pullback, and move higher. I mean, that's just a picture perfect setup. You don't see that all the time. Not saying it can't be done. Usually, what happens is first move, slight pullback, second move, consolidates for a while. So if you try to buy off the first initial test, you're probably going to lose on it, and then wait for more volume to kick in, and then it goes higher. It needs to have more volume. The volume needs to continually stair step like this. Okay. If it's like this, pushes up, then massive decrease in volume, like that, and up a little bit. I mean, this is not a breakout you want to trade, man. You want to look at, is this above the 9 EMA or not? And it's not going to be. Okay. And third thing is VWAP. Looking at your VWAP, is it moving up exponentially with the price, or is it kind of flatlining, or maybe is it even going down? You shouldn't be trading it if it's like that. High odds of a fake out.